Going forward, continued momentum on large deals, diversification geographically, and reducing the margin gap to peers will be the story for TechM. Some of our growth gems are real estate business, Mahindra LifeSpaces, a very robust addition of gross value, which is GDV, 5.6 thousand crores, up 60%. Residential pre-sales at 925 crores, up 2x. We've had multiple occupation certificates delivered before time. And as we look at this business, it's poised for very strong growth. It's a business that's executing at a very sharp level right now. We are looking at GDV up from 8,000 crores that we had only 3 years ago to 50,000 crores. This is the basic asset for future growth, the land that was required for future growth in this business. And that's at a very strong level right now. We've got multiple large mixed-use projects, each at 5,000 crore plus of GDV. And we're expanding our industrial portfolio. So that's positioning LifeSpaces very strongly right now. Our logistics business is great to see a quarter as strong as this. 14 crores from an M&M standpoint, 25 crores at the business level. And we've gone through a few challenging years. And the business leadership team has put in a very strong performance to be able to show outcomes that put logistics back on track, and a business that we feel very strongly about in terms of its potential. So we're starting to see that potential play out with revenue, with margin, and the highest ever quarterly PAT performance. I generally don't like saying highest ever because I expect every business to be highest ever every quarter. So it would just be too much if we keep saying it every quarter. But in this case, given we've gone through a few challenges over the last few years, it's one thing that we are pointing out. From a future growth standpoint, continued growth in logistics. The industry is one that will grow at a very rapid pace. Express business is turning around well, and our operating effectiveness is at a much, much higher level. And that's really going to drive growth for logistics. Our truck and bus business, and you've seen our announcement on the merger of Mahindra's truck and bus business with SML. It's one that we feel will give tremendous synergies and really unlock the potential of this business. It is a business that we feel will start challenging some of the larger players in this industry. And with the strength that we bring in, also the strength from our auto team, this is one business that we feel very, very good about. And these synergies will help the business only do better. Aerostructures. This is a business that I would refer to as one of our tiny businesses a few years ago. I can't say that anymore. This business has got $1.2 billion of deals in a fairly short time frame. Last year alone, $621 million of deals. And this only continues. We're starting to see a further presence in what we call shell and skins. We're starting to see an acceleration of industrialization of key projects. We've got multiple large orders from various OEMs, and that's really starting to place this business as a key business globally, not just in India, in its space. So going forward, we're moving further up the Aero value chain, diversifying the customer base, and we will look at strategic acquisition in this space as well. That will make this business even stronger. So it's really a story this quarter about all our businesses coming in and driving growth, and that makes a tough quarter easier in terms of its results. Let's talk a little about AI. We started talking about this for the first time last quarter, and this is the page that we had shown last quarter in terms of our ambition to be a tech leader in every industry we play in. Our approach around deploy AI, transform processes and businesses with AI, and invent AI native ways in certain businesses. month ago. We had folks on the shop floor talking about how they were using AI and explaining AI in terms of how that's changed life for them and how that's helping us build better quality products and doing that faster. And it is these process owners that are the ones that are critical to leveraging AI in a successful way. And they make up many of the stories that we talk about. A slide that you're familiar with, and thankfully the numbers keep going in one direction only. We strive to keep it that way. ROE is up at 23% now, and EPS for this quarter alone is 48.6 rupees, up 34% as we talked earlier from last year. And as we saw this chart, we said, let's take a moment to reflect what are the various things that are driving performance. And that's something that we will come back to a little later. Before that, we'll have Rajesh come up and talk about auto and farm, and then Amar will come up after that on financials. Thank you.
Hi, good afternoon, everyone. I'll start with farm. And, much as against what many of you were expecting, the first quarter was a very robust growth. We had an 18% growth in tractor volumes, a very strong market share of 44.9, though it was a small drop compared to a very high market share we had last year in first quarter, but a very, very strong market share overall. And that shows you that the 45.2 last year was an all-time high, and 44.9 is a very strong trend on the market share. We also had a very strong farm machinery growth, and that continues to grow now at a level of 360 crores in this quarter. So the farm machinery growth as well has been very robust, both tractors and farm machinery, clearly indicating a move towards a greater level of mechanization. I'll talk about that a little in the rural slide. This is a new format to help deaggregate or disaggregate the way we are showing our margins. So I'm going to take a minute to explain it. The first column is what you've seen in the past, which is the core tractor margin, which is domestic tractors plus export of tractors. You can see that the margin has dropped somewhat, but it's still at a very healthy 19.2%. The second column is our performance in international subsidiaries. That includes impairments, and Anish just mentioned that we had some actions that we had taken in our Kun foundry. You can see that we, in the quarter, lost 340 crores in international subsidiaries. The others are listed below, but broadly includes Powerol, farm machinery, and other domestic subsidiaries of the farm business like Swaraj engines. So you can see that has given a profit of 205 crores. So when you add that up, you see the number that you see at the extreme right is what we report as the consolidated farm results. That has delivered a margin of 14.2% with a profit of 17.8, 1,781 crores. So really three parts to the total farm consolidated: core tractor business, domestic plus exports, international subs, and others. And that's the way I'll show you a similar chart on auto, not exactly the same columns, but this is being done to help you all understand the breakup of the margins better. The 19.2 here matches the column 1 in the previous chart which you saw. So I'll just flip back if it goes easily. So the 19.2 in column 1 comes to the chart that you've been seeing regularly, and that's just the core tractor performance. We always show this chart to kind of say that our margins will operate within a band, and the band is driven by what's happening to industry growth. The band also is driven by what happens to commodity prices. Both of these have an impact on the margins that we're able to deliver. Typically, what we say is our tractor business will deliver margins in the 17 to 19% band, and that's what we have been saying for the last many years. There are times when industry growth is very strong, or commodity prices are low, or both happen, when you may see margins above 19%, but really the band that we kind of request you all to look at is the 17 to 19% band. We had a 9% growth in PBIT. Without impairment, that number is 12%. The number that you see at the bottom is the 15% growth in PAT. And